How to file your business taxes. If you're watching this video, then chances are you need to file your business taxes. And that can be incredibly stressful and overwhelming for a lot of people. So today, I want to make your life a little easier by walking you through all of the steps you need to take in order to file your business tax return. Now, this is important regardless of who you use to file your tax return, whether you plan on doing it yourself or hiring a tax professional. Because ultimately, if you get something wrong on your return, it can end up costing you thousands of dollars in a variety of different ways. It can cost you by paying way more money in taxes than you actually have to pay, or it can cost you if you make a mistake and end up owing penalties, interest, or worse. So if you want to avoid that, stick around for this full video to learn the tax information you need to file your business return, the correct tax return type to file based off of your entity, as well as the due dates for those returns. And then we'll take a look at some key areas of those returns that is very important for you to get right. And then finally, I'll let you know what you can do if you think you're going to be late on filing those returns. And by the way, if you're new here, my name is Sherman the CPA, and I specialize in tax planning for businesses with over $100,000 in income over at mycpacoach.com. We file a lot of complex tax returns, and we save our clients a lot of money in taxes as well. So I'm excited to share with you some of our best practices to help you go through this process. So let's dive right in. Step number one to file your business return: collect your tax information. The most important information would be your business accounting records for the prior tax year. Now, ideally, you would have a profit and loss statement which clearly shows all of the income your business earned and all of the expenses you incurred to earn that income. But a lot of business owners I talk to do not have this readily available, which can end up resulting in them missing thousands of dollars in deductions that could actually lower their tax bill when they pay. Which means if you file your return without this information, you risk missing expenses that can lower your taxable income. Even the IRS specifically states that you may forget expenses when you prepare your return if you do not record them. And normally the IRS is not looking to help taxpayers pay them less money. So I would take their word on this and make sure you have a strong accounting system in place. Plus, the IRS literally requires you to keep up with your business records, so you don't really have a choice anyway. Now, in regards to record keeping, the IRS says you can choose any record keeping system of your choice. So whether you use QuickBooks, spreadsheets, or shoeboxes to keep up with your records, that's your business. You just need to make sure that you have records that clearly show your income and expenses. So if you have not done this for the prior tax year, start doing this before you try to file your tax return. You can spend your own time doing this or hire a bookkeeper to help you with this. Now, bookkeeping can be very administrative. So for most businesses, it's typically better to use a low-cost provider to prepare your books so you can spend your time growing your business. And if you want to use the vendor I use for my clients, just click the link in my description. But the moral of the story here is get your books done so you can produce a profit and loss statement and balance sheet, which is going to be used to file your business taxes. Step number two, locate the correct tax form to file your business return. Filing the wrong tax return for your business can result in your return being rejected by the IRS and subject to additional penalties and interest that you don't want to worry about. So it's important to get this part right to avoid unnecessary stress and confusion in the future. With that being said, let's quickly walk through this. Okay, so first of all, if your business is owned by one individual and is not a corporation, then you would use Schedule C on your individual 1040 tax return to report your business activity. So if you are a sole proprietor or single member LLC, you will file with a Schedule C. Now, a Schedule C is actually not a business return, not technically. This is a supplemental schedule that is connected to your individual return, which means you would have until the individual tax deadline to file this schedule with your individual return, which is normally around April 15th each year. Now, for all other types of business returns, your tax return is likely going to be due around March 15th of each year. So let's talk about those businesses and the forms they need to file. So if your business is owned by 2 or more individuals and you are not a type of corporation, then you would file a Form 1065 return, which is a partnership return. So this form would apply to multi-member LLCs, which is just an LLC with partners, and general partnerships, which are just unincorporated businesses with multiple owners. And the last group here to address would be corporations. If you file as a corporation, then the number of partners involved is irrelevant. The only thing that matters here is that you choose the correct corporation return. Now, S corporations file Form 1120S and C corporations file Form 1120 without the S, which is normally due around March 15th of each year. Now, step number 3 would be to complete your business tax forms. All right, so let's look at what all of these tax forms have in common. All of them require very basic information about your business, like your business name, address, employer identification number, and so on. And then ideally, you already have a well-organized profit and loss statement that allows you to easily insert your business income and expenses into these tax forms. So you can clearly insert your gross sales, gross income, and all of your deductible expenses like advertising, office expenses, wages, contractor expenses, and so on. Now, it's simple to insert these numbers into the boxes here, but knowing what expenses to deduct and the rules behind those deductions can sometimes be complex. For example, most tax forms have some type of line item for other expenses, which you can see on line 27 for the Schedule C, line 20 on the 1065, and line 19 on the 1120S. Now, this is how the IRS allows you to deduct all ordinary and necessary business expenses that are not deducted anywhere else on your return. Which means if you do not know all of the types of expenses you can take here, then there's a good chance that you may miss deductions and consequently pay more money on your tax bill. I see this all of the time, and I even created a separate video on tax deductions that 90% of the business owners I talk to miss. So be sure to subscribe and check that out if you're interested in maximizing your deductions. And then there's the flip side. Some taxpayers try to write off expenses that are actually not deductible and can easily land them into some trouble with the IRS. So it's important that you, or ideally your accountant, are knowledgeable of the types of expenses you can write off on your business tax return. Anyway, the goal for this step is to complete the required fields of the business tax return for your business. The biggest thing is really properly reporting your income and expenses, but there are some other items that can specifically affect your return that you need to be aware of. For example, is your business eligible for the QBI deduction, which allows you to write off 20% of your qualifying income? If so, you would need to take a look at Form 8995 to figure that deduction out. And what about some simple check the box items like how your business reports income? Is it on a cash basis or accrual basis? Or in other words, do you report income when cash is received or when revenue is earned? There's a very big difference between those two things, and that can affect your tax liability if you're not aware of it. And how about material participation? This is a simple yes or no question, but the answer could add thousands of dollars to your tax bill. That's because your answer here helps determine if your income is considered passive in your business or earned income. And both of those two types of income are taxed very differently. For example, passive income is typically not subject to self-employment tax. But ultimately, answering this question should be fact-based, based off of the IRS rules. You should answer these questions based on your actual facts and circumstances for that tax year, and not just checking boxes to compute the lowest tax bill. No, that would be tax evasion, which is illegal and can put you into some serious trouble, and that's not what we want. But tax avoidance, on the other hand, is perfectly legal according to the IRS, so you don't even have to do those things. You can avoid taxes by simply changing your facts, which is normally a result of careful tax planning. And that's what we specialize in over at mycpacoach.com. We prepare plans that saves our clients well over $10,000, $20,000, and even over $100,000 in taxes. So if you're interested in becoming an exclusive client, click the link below to apply. Anyway, let's move on here. Step number 4, know when to file an extension for your returns. Now, this is important because failing to do this can result into some serious penalties. In short, if you are going to be late on filing your return, then you should likely file an extension. An extension gives you an additional 6 months to file your tax return. So if your business return is due on March 15th, then you would have until September 15th to file that return with an extension. Or if your return is due on April 15th, then you would have until October 15th. Now, here's another critical point. An extension gives you more time to file, but not more time to pay your taxes. There's a big difference between those two statements. The IRS says an extension does not grant you any extension of time to pay your taxes, and that you should estimate and pay any owed taxes by your regular tax deadline. So basically, the IRS still wants to be paid, even though you need more time to file your return. An extension allows you to file late, but you're still supposed to pay them on time. Otherwise, you will be looking at 1 or 2 penalties, so let's go ahead and take a look at those. So in general, there are 2 types of penalties when it comes to things like this. Number 1, a failure to file penalty, and number 2, a failure to pay penalty. Now, a failure to file penalty is exactly what it sounds like, a penalty by not filing your return by the due date. Now, in order to avoid this penalty, then you would need to file an extension before your due date, and if accepted, you would have an additional 6 months to file your return. But a failure to pay penalty, on the other hand, is a penalty for not paying your taxes on time. And again, filing an extension does not help you avoid this penalty, which leads me to the next step here. Step number 5, pay your taxes before your deadline. Because tax extensions do not extend the deadline to make your tax payment, you must make your expected tax payment by the deadline to avoid that failure to pay penalty. And in most cases, you should have been making those payments during the tax year as quarterly estimated taxes, especially if you owed taxes in the past. And if that is the case, then most, if not all, of your tax liability would already be paid for, and you would have already satisfied this requirement. And by the way, if you're unsure on how to do that, then watch my video on how to submit estimated tax payments to the IRS. Now, if for some reason you did not make any estimated tax payments, then you will need to calculate the tax you expect to pay and pay that before the deadline. You can easily do that through a mock tax return that reflects the type of return you expect to file anyway, and submit the estimated tax payment that you calculate from that return in advance. Or ideally, your tax professional can do all of these things for you, which is typically a wise investment for business owners with a lot of income at stake to be taxed. Nonetheless, once your taxes are paid and eventually filed, Uncle Sam will be out of your hair until next year, hopefully. But if you need help with any of these things, feel free to apply to become an exclusive client of mine at mycpacoach.com. Otherwise, be sure to subscribe for more great videos like this. I look forward to seeing you in the next episode.